Good morning, everybody. How are you? A very warm Friday greeting to you all. I had to get an extra coffee this morning. I guess the internet exploded overnight. Actually, last night I was reading a little bit of it before bed, but it's actually quite glorious if you take Twitter off your phone. Then when you just check in every once in a while, you don't get too caught up in the reactions and the emotions. But yeah, what can I say? Definitely popcorn time. I hope you all have been enjoying it. Neither of these characters is very good for European sovereignty, it seems. So I'm trying to work my way through that, but we'll see. I was just watching Anthony Scaramucci's reaction. He predicts that there will be some sort of a truce, or they're going to try to tone the rhetoric down because it's not necessarily good for either of them to, you know, blow up the golden goose or situation that they're in the presidency, so to speak. So we'll see. Speaking of Scaramucci, we're going to have an episode drop with him today. It's very good timing, I think, so you can enjoy that. But let's get into, speaking of the iterative process of these charts and tracking Bitcoin, let's get into what we talked about yesterday. Yesterday regarding Bitcoin's valuation, utility, and how it compares to the fiat TradFi world. All right. So just jump in, anybody, if you have questions here or want me to slow down. Not a problem at all. Here's Fedwire. Okay. And what this is the transfer value of Fedwire over the past 12 months. Okay. A lot of the reason that I think, or I hope, that these charts are understandable is because I'm not showing things daily or monthly, but you got to roll it. It's like Denzel Washington said in that Flight movie. You got to roll it forward 365 days. Usually stuff makes the most sense when you think about it annually, like your income or expenses, monthly or annually, but I think annually is even better. So what this is basically the velocity of Fed funds. It's the velocity of bank reserves. This is how much value goes through the pipes of the fundamental core of the system network of the dollar, which is Fedwire. All right, there are banks, there are international banks that have accounts with the Fed. This is Fedwire. All right, this is trailing 12 months. Okay, we got data back to 1988 here. Back in 1988, it was 156 trillion a year. All right, this is rolling 12 months. Okay, so it's 156 trillion. Before the blow up in 2008, we got to 750 trillion dollars a year in value. A little bit of hiccups here, and then back after QE3, up to 879 trillion again. Then down and back up again here during COVID. Remember, the value of stuff at this point is only, $6 trillion. That's the value, the stock. This is the flow. So this stuff can turn over a tremendous amount of time, and this is core of the system money. This is not Visa, MasterCard, or Venmo or anything. It's not deposits. This is what the Fed itself does, the central bank. All right, and it's been slowly grinding up since then. We're now at $1.1 quadrillion. We got over, I should have pointed that out, right? We got over a quadrillion in 2022. So now we're at $1.1 quadrillion a year through Fedwire. Good morning, Sandro. Yeah, totally possible. I mean, anything is game at this point. Uh, there's other stuff going on, right? Because the blow up from Musk's side cannot only be his desire for fiscal responsibility, right? I don't know if it's just ego. I don't exactly know. But it's not his desire for fiscal responsibility. I mean, he's torching his own contracts at the moment, apparently. At least with Tesla. We'll see about SpaceX. It's one of the reasons why I've backed off from the hardcore anarcho-capitalism over the years, because, like it or not, I mean, governments have been around as long as businesses have, in some way, shape, or form. Yes, there have been kings and courts longer than there have been democracies or monarchies. Obviously, it's still part of the kings and courts, but they're just different functions. And to see these two jokers, both business titans, trying to do something that certainly most center-right, center-left, fiscally conservative people would like them to do, which is rein in the profligate spending. It's gonna take time. That's what I was saying before. It's got to be bipartisan. Got to have judges involved. Have congressmen involved. But tune into the Scaramucci interview, because he was the last person to be surprised about this. Definitely no surprise there. And Scaramucci had a 11-day record in the White House, and Trump won. But yeah, I do hope. I mean, I do think Bitcoin comes out of this stronger for sure. Absolutely. So, so look at things in raw yearly numbers. All right, $1.1 quadrillion. That's what flows through the pipes of the Federal Reserve each year. Now let's look at Bitcoin. All right, you're barely going to see it. I'm going to put Bitcoin now. Can you see it? Okay, so Bitcoin started 2009. You started to get dollar values of what Bitcoin could do, 2010. Let's zoom in, see if this gets any bigger. No, it doesn't. I'll put it on log scale just to be easier. All right, so Bitcoin's certainly growing. The trend is great here. But this is trailing 12-month transfer value in dollar terms through the network, okay? What you'll notice is during the booms, right, 2013, 2017, into 2018, and then 2021, into 2022, you get these increase up higher, and then just slowly grinding higher now, but not crazy. But obviously, look at the numbers here. So we got 1,000 trillion, 1,100 trillion for the Fed, only 6 trillion for Bitcoin. So a long way to go, but the trend is still really, really good. Okay, so if you look at the trend, and we put the trend on log scale, take that off. It's crashing down to, I agree when people say it's a little bit light on the transactions. It has been, all right, relatively speaking, compared to the last bull, but I think we got plenty of time to run here. But if you looked at, say, from this window, we looked at like we were just crashing down to, to 1x. It's a pretty amazing clip, right? Because we started, hundreds of thousands of times smaller than Fedwire. And now Fedwire is only 60 times. So there's plenty of room for the utility of Bitcoin to grow. Laborita, Arnis. No, Latvian roots, in fact. That's where I am at the moment. Latvian American, and I live over here in the Baltics. But my name does seem Lithuanian. My last name, it's kind of Polish Latvianized. Maybe Lithuanian, but I've never heard of Lithuanian in my family. So this is very exciting. Again, long-term don't freak out. That type of thinking, which I'm trying to convey here to most people when I do this stuff. I think this is very exciting that the largest payment processor in the world in terms of base money, that is transferring core of the system, federal funds, all right, central bank money, it's called Fedwire, does $1 quadrillion a year. Bitcoin, super small, only 6 trillion, but that thing has come, that ratio has come way down. Now, it's not as low as the record, which was under 60 times. As the bear came in, transactions fall. Also, the value of the coin itself falls. This changes. But here's the kicker with this, with these numbers, is that nothing needs to happen in the Bitcoin network structurally, fundamentally, for this ratio to get to 1. The only thing that needs to happen is the price of Bitcoin rises. That's it. It's not a function of scale or transactions per second or, number of users that are plugged into the network. It is true that Bitcoin is limited at the moment to 300 to 400,000 transactions a day, but the value of those in dollar terms, right? Not in Bitcoin terms, but in dollar terms, is infinitely flexible, infinitely elastic. So it's bullish. All right. We can come back to this, but this is now, let's look at this as far as actual transfers. Sometimes we call them payments. In the Bitcoin world, we actually call them transactions. You could sort of mix definitions here. I'll explain, but the volume of transactions for Fedwire on a trailing 12-month basis, all right, is now up to 200 million. This is a year, okay? So from April 2024 to April 2025, there were 200 million transactions on Fedwire. Bitcoin, with batching, so I'm kind of cheating a little bit because a transfer is different. A transaction is different than a payment. We have this concept called payments in Bitcoin, which will count batch transactions, which is just best practice. It's a very simple thing, but anybody can do it. You can do it with your own wallet software. If you wanted to send one transaction with Bitcoin going to 5 or 10 or 20 different addresses, you could do that. So it'd be one transaction and 20 payments in that example. So you can count these up. So now I'm just showing you the payments, the total to all different addresses on a trailing 12-month basis. Look at that. Bitcoin's already doing more than Fedwire. I would say that I'm cheating a little bit, though, because Fedwire doesn't publish. There's no doubt sort of batched payments inside the Fedwire system. Like, if Bank of America is sending one payment to Wells Fargo overnight, of course, theoretically, there are, tens of thousands of transactions inside of this one payment. It's just the banking system doesn't work that way at all. You can't. Banking system is debits and credits, assets and liabilities. It's netting all the time. Of course, there's a lot of theoretical number of transactions, Venmo, PayPal, all the stuff that are behind this one payment that Bank of America could make to Wells Fargo at the end of the day. But nonetheless, Bitcoin is transparent. So we can actually see the number of payments that are batched. So Bitcoin's already ahead of Fedwire here. Now, we can also do Fedwire transactions per second. It's the same thing. All right, it's the same thing as the green. It's just on the right-hand axis now, right here, transactions per second. Fedwire represents 6.8 transactions per second. And Bitcoin represents here Whoops, not this one. I want to see this with batching. 11. So Bitcoin is ahead of Fedwire. The utility of Bitcoin is already working better than Fedwire. If you want to back off the batching, though, and only look at the actual transactions, like I said, you can make one Bitcoin transaction with 20 payments inside the transaction and just look at that one, then Bitcoin would be here, the dotted line. And it's still very close to Fedwire. All right, we're almost to Fedwire. 6. This is the number that you typically hear. Bitcoin can do 6, 7 transactions per second. So, we're on our way. There's nothing, again, there's nothing here to stop this train to compete with what the Federal Reserve is doing. This chart is a bit more constrained because we're looking at numbers now churning through the Bitcoin system, like the number of transactions. Okay, so this is a bit more constrained, still ahead of the Federal Reserve. This is not constrained at all. This green area can go up infinitely or collapse to 1, meaning 1 to 1. We could have $1 quadrillion of value going through Fedwire and $1 quadrillion of value going through Bitcoin with doing nothing to the Bitcoin network at all. The only thing that has to change is the price has to go up. So the virtuous cycle of Bitcoin really shows here, I think. And then to go back to this chart, I want to reiterate the point. Even if we take off the batching, if like you said, batching's cheating a little bit, so let's take off that's the batching value. But yeah, let's leave this. No, let's take off the values. Just look at transactions per second, okay? Transactions per second. Bitcoin's already doing what Fedwire does, right? Taking out those payments, 20 payments per one transaction. Let's just do apples to apples transactions, the number of. Bitcoin and Fedwire both do about 6, 7 transactions per second. This has nothing to do with Visa, MasterCard, PayPal, Venmo, checks, SEPA payments, SEPA Instant. All those things are a few levels up in the banking system. Those are bank to bank. Those are banks dealing with their own liabilities and assets. Those things are still going to exist in a Bitcoin world, no question. Bitcoin is the base layer. It's the base layer. Bitcoin, that's why I've been saying for going on 8 years now that Bitcoin is the base layer, apples to apples, corollary to the TradFi system. So when you hear like Visa and MasterCard does 3,000, 4,000, 5,000 transactions per second, it's just like you can forget about that. It has nothing to do with what Bitcoin is meant to do. Bitcoin is meant to transfer core of the system value from one component or entity or person to the other person. It may have a few dollars per transaction as far as a fee. Of course, it's Satoshis per byte as the native fee in Bitcoin because it's all digital cash. But it has nothing to do with Visa and MasterCard. It's not analogous at all. So, important to compare apples to apples. Good morning, Dats. Yeah, this is a mind-blowing chart. In the early days when everybody's arguing about scaling, we thought it would only be 3 transactions per second. Once SegWit happened and people started to figure that out, without even figuring in batching, it's been spiking up, and then Taproot, of course, as well. But if you even put batching in, from the transactions that we can see on the Bitcoin network, we're already well above Fedwire. And like I said, Fedwire, you could argue that theoretically there are batched transactions. They're obviously batched, but that batching is like totally different per each bank, per system. Like, there's not a unified system of batching Fedwire transactions in the banking system. It's assets and liabilities. JP Morgan has a different set of books than Credit Suisse or Wells Fargo or Bank of America. So at the end of the day, this is the apples to apples comparison. Technically, this is the one, but you could make the argument that this is just as comparable, the orange line. So that's your utility. That's why I think we're all fine. Actually, I haven't updated this chart in a while, so I was surprised that it had backed off as much as it did in 2023 to 300, from being down into 60 in 2022. But like I said, there's nothing here that couldn't change this valuation discrepancy other than a change in price, which is just the market. And like you said, we're at 5%. That's my best guess right there. Trend line would put us a little bit lower. We'll see how the month finishes out. There's been a little bit of a dip in price, I guess. And then we go out to 100% 15, 20 years from now. Do you guys want to look at anything else? Because that was the main thing I wanted to show today. Was talking with the fellow that was talking about the pie trend and the 350-day moving average, and meeting those two, how it could portend like an April 2026 top. I have to put that together still. It's just sort of a meeting of trend lines. Not exactly sure how to extrapolate it out, but I'll look at it some more. I wish. But regardless, of December 2025 into April 2026, if you get up to the 90th or the 93rd percentile, I think 300,000 is totally reasonable. Not OG enough. But you never know. Got to play these peaks and troughs better. But that question does come up, about the utility of Bitcoin, like Yuri asked yesterday. I mean, it comes up a lot. People think about buying the coffee, proverbial coffee. Still, there's no coffees that are going on in any of these transactions. None at all. This is bank to bank, bank to government, government to bank, central bank to bank. That's what's inside of the light green area here. And, due to the institutionalization that Saylor has pushed, we're going to keep seeing that dark green accrete in value to this. I'm not going to entertain you anymore on those questions, Gio. But as I was talking about, as far as price spikes, they say in Bitcoin everybody gets the price that they deserve. I first heard about Bitcoin even before this pump. Somewhere around, it was about $4. It was right before the pump. It was like here. May. It was $4 to $5 when I first heard about it. And then there was a flash crash right here as it went to $35. First empty Goxing. Comparative was hacked the first time. And I still need to find it. There was an article that showed this like bubble chart of the price just crashing, but then it recovered miraculously. But intraday it just crashed, and then obviously fell down to $2 by the end of the year. Would have been a great buying opportunity, but unfortunately I was not. But if you think about, some of these peaks and troughs that Bitcoin has offered, right? It's been an 70 to 80% drop each time, right? From peak to trough. Do you guys think it's not going to be the same this time? It's hard for me to believe that it won't actually be the same. I mean, if you think about what just happened on Twitter yesterday, like, I mean, one of the richest people in the world is comfortable torpedoing his own wealth for ego or whatever, however they're going to decide to tide this little rift over. Sure. But and by herbs, I presume you mean, but you couldn't buy herbs with a credit card, right? But no, yeah, everybody gets the price they deserve. That's probably the best way to say it. Yeah, I was big into that idea. And that's why it's so funny that he hasn't adopted it, or he's just scamming people, right? Like he's talking about Doge, and it's clearly that he was manipulating the price of Doge, but he could legitimately work on an interplanetary currency. There are challenges, right, between block time between Earth and Mars because of the latency. So it might not work interplanetary, but there would have been plenty of time for him to figure that out. Right. No, I got you. I got you. Good morning, Slanik. Good morning. Hope you're enjoying the internet breaking from where you are. Still back in Eastern time zone, I guess. Working late. But yeah, buying herbs online was definitely a good reason for a lot of people to get in. Pretty wild to hear that Ross had a 30 million value worth donation. It's 300 coins coming from another dark exchange. I mean, it's going to be interesting to see how that all plays out with just enforcement of these things, because Bitcoin is, we think that everybody's gotten it buttoned down and everything, but obviously they don't. And anyway, it was a major, I should find some of these policy papers. I remember reading some good articles about the euro dollar back in like the 80s or before that, like the 70s, where it was always on the Federal Reserve bankers' minds that to have a currency with international integrity, then it had to be neutral. I mean, you couldn't just come after certain people for using that currency, because you would add a lot of friction to the exchange rate, to the usability, utility, fungibility. They were talking about this even in the 80s. So it was like a catch-22. They're like, okay, we want to regulate it. We want to control euro dollars, that is dollar balances outside the Federal Reserve in other countries. But on the other side, the currency needs to be neutral. So if other people want to have dollar-denominated deposits, then, we can't really say much about it. Now they're going to try to do that with Bitcoin, even though they obviously have no regulation jurisdiction over Bitcoin. We'll see. I think the challenge, I'll pull up the old chart of the gold versus Bitcoin. The challenge, of course, is going to be if they can keep not if they can keep it. The challenge is to see how Bitcoin's resilience looks after so many governments start to reserve Bitcoin almost to the level of reserving, like gold. So where do I have it? Sorry, I'm trying to find the gold backing. Need to relabel my charts. I don't know. I mean, rich people do use their stock holdings as collateral all the time, so I presume it would work like anything else. If you use Bitcoin itself, but if you had like IBIT or Fidelities, any of the actual ETFs. If you had Bitcoin itself, then it might be a little bit more complicated, but it would probably still be some sort of a brokered agreement. Wall Street likes to compartmentalize stuff, right? So there's probably a BitGo or something would hold the Bitcoin, but then BitGo would have to create an instrument. The instrument could be collateralized against lending or excuse me, borrowing against other assets. Where's this damn backing? Try to find it. It's a lot of numbers behind this, guys. I feel pretty confident. I feel pretty confident about this model. This puts it all together. I've heard about it, haven't looked into it much. It was Giovanni working on that as well. Look it up really quick. I mean, it has the effect of looking like a polynomial. Basically, it can start to go up and down a little bit, which is great. I mean, it's let me pull it over. The thing is here, like, you start to play with a lot of numbers, and you just estimate like where the fit is. Okay, so this has something to do with 335 days trailing, whatever. I couldn't calculate this on my own, or I could, but it would take me a lot of time to just fit this together. And you're just starting to get into the world of quants and just trading like every other asset, which is fine for most people, but I'm just not interested in that as much. I think that a lot of day traders end up either not getting a lot of sleep or not getting a lot of sleep and ending up with a little bit of losses. So I'm just not interested in the overall idea of it. Yeah, I mean, it's not for everybody. Oops. Let me pull up. I honestly have too many charts that I've drawn. I can't even find the charts I want to show you guys. But yeah, I think for like really good stuff that's simple and just great charts, like Sminston is great. He's got this decay model, which is really good. So the bottom is power curve, right? So here's the power curve. the top is, he's got two different ways to do it, but it's exponential. Oh no, this isn't even, actually, he's calling it quantile upper bound. So he used to be using exponential decay, which was slightly different than a power curve, but now it says quantile upper bound. I'll have to do an interview with him and talk about this exactly. But his, this oscillator that he's created is pretty solid, I'd say. It's probably the best that you can do, and he updates frequently. And this just goes a little bit to my limitations on calculation, because for these, like, I calculate everything manually. Like, I do it all manually because I need to get the data points to feed into Excel or Google Sheets to run the mouse cursor over. But this exponential decay it's a bit more complicated, and I honestly just haven't taken the time to do it. I'm sure I could do it, but you have to. He's like taking only a few points here, at least the old way. I don't know if he's still doing it this way, but what he would do is you take like the top few points on each prior cycle, you run a regression on that, and then you also adjust that regression to be decaying a little bit, like an exponential losing its rate of growth. It's not using a power curve regression, so it's just a little bit extra stuff. So I just there's only so many hours in the day, but he's got a really good stuff here. Looks bullish, obviously. So I was showing actually something like this with the M3 versus debt. This is M2 versus debt, but obviously when the money supply gets ahead of the debt, as he's showing here, price rises, and we see that very similar to the M3 to debt I was talking about. Because remember, M3 to debt is the ratio is about 1. It's 1 to 1. His is different because it's M2, but it's the same deal. We're running money supply is very low compared to the debt, so presumably they increase the money supply to help pay for the debt, or just to give people more comfort. And then when the money supply rises, the Bitcoin price rises. But again, I remain pretty adamant here. I don't think this is the story. I think you see it. You can overlay these things. I think it's true. It will become more and more true. But that's not the driver of the power curve. I think the driver of the power curve is just network. It's network stuff. It's just, it's just adoption. What you see here is more adoption than anything else. And I'm fairly confident on that idea. But it certainly is true that as this stuff gets more financialized, traditional Wall Street gets involved, these ratios will play an ever more and more important part of Bitcoin's price. But I don't really see them as the main driver. Like, this is the point. This is, if you look at these two things, they look very, all that you can tell is just one is approaching the other very quickly. You can't see any noise of the traditional financial system is in green here, and there's it's just a straight line on log scale. Like, there's no, on the margin Bitcoin might pop here because of something. What the black line is exhibiting something way stronger than the green line, and that's just like kind of as simple as that. That's my view. Yeah, that's going to be interesting. This Bitcoin treasury stuff is not going away either. Yeah. I don't know. I don't know why he's not getting on board with the power curve. He should. He should. I mean, he himself has done models done by a consultant who only knows how to do exponential growth. And they don't look as good as this model. And he's done bull, bear, normal case. Like he's done scenarios. He himself has made models. So, you know, and so this community as well. This is Bitcoin Intelligence, Cena, Bitcoin Analytica. Like these are hardcore stats guys. Cena. This is another view of the quantile model. And there we are. Like mega buy. When Peter Zion is on Joe Rogan telling you it's overvalued, just mega buy periods here. And now we're moving into the exciting phase. A reminder, you know, they have this beautiful quantile model. I'm not doing it that way. I'm doing it by multiples. So that's why mine looks a little bit ziggy and zaggy here. So I go by multiples over the power curve as the power curve evolves. So it's a little bit different. But the benefit of doing it my way, again, their way is more beautiful for sure, because you get these beautiful tranches. But with here, you don't really know where it is in relation to the power curve itself. With my way, at least you get the multiples. So you see it. I got to take the yellow off here. Nobody can read this. Let me take the 3, 4, 5, 6 off. Should be able to read the multiples, but so the point here is that if you know that the power curve is going to be 125K by the end of the year, what does the 90th percentile say? It's 2x. 90% of the time, it's going to be under 2x, but we have gotten to that 90th percentile, obviously, in the last every bull, every pump. So 2x is 250K, 2.1x, 260, 2.2, etc. And then I'm bumping up here to the 98th percentile, 3.9x. I think all this is too high. 3.9, 4.7, 7.8 is the max. It's impossible to get again. That's $1 million Bitcoin. I think that's never going to happen again because that pump was here, which we just talked about this period. To get 7.8x over the power curve at that time. So that's just why I use the multiples. I think it's a nice little way to... The multiples don't change in my model. But if you did calculate multiples here, they would change all the time. But here, the beautiful thing is the percentiles are the same. Are you back to this one? We were saying when it gets to 1. That is the transfer value of Fedwire versus the transfer value of Bitcoin in dollar terms. It's nobody knows, obviously, the future, but I think as this number approaches 1, Bitcoin is doing more, like it's doing as much value as Fedwire, which means we're probably going to be on a Bitcoin standard at that point. So right now we're 60x. We backed off because of a lot of things. Actually, the halving, was occurred right here, so that slowed down the rate of coins because the rate of new coins are also coming out here. Every transaction is included, which is fine. I mean, this is just, it's base money stuff. You could do an adjusted volume like Coinmetrics does this, where you remove volume to exchanges, all that stuff. I'm not taking that out because those are legitimate transactions. The bigger we get, like if exchanges are transferring Bitcoin between each other, that's a legitimate transfer of value at this point. In the old days, we used to say that wasn't legitimate transfer of value, but it absolutely is legitimate transfer of value now. If prior year-end trend lines held, projected price today would be. You mean on my website? Yeah. So again, this is all the power curve, same stuff on my website right here. This is the key column, the last column. So, no, it's okay. It's just telling you what, it is decreasing. You're right. It is. The slope of the trend is decreasing. But if you look from 2016, right, these are just arbitrarily cut off at each year end. But from 2016 to now, they're still all very good. Like, if you had only looked at the power trend using data up until 2016, then project till today, 108,000 is an amazing prediction. Same thing in 2017. Yeah, it's a little bit higher, you know, even higher after that pump in 2017 went to 140,000, then it backs off lower. And it has been getting lower. We have been in a very, as we've been talking about, we've been in a very slow growth phase here, especially because of the halving. Like this time, the halving really seemed to kind of hit the Bitcoin network. It slows down miner revenue because the price is just not keeping up with the pace of the change here. I expect that to change in the future. I expect the price to rise, but once we go through another bull cycle, and hopefully it lasts, you know, more time, all of these numbers will be pulled back up. But it is true, you're right. 2024 and into this is the current curve, 103,000. They are lower than even prior years, but still. Okay, 2015 was aggressive, 2014, 13, 11, and we have, you know, the 2010 trend, $5 billion Bitcoin projected today. Obviously, these have all broken. But from 2016, you can't really say that it's not like close compared to, say, stock to flow. Stock to flow model or any other model has never projected anything like this. Yeah. I was trying to say that yesterday too, you know. I think the carnival ride can go out long, a lot longer than people expect. Silly season can be a lot longer. Does not mean I'm correct there. Does not mean that we might not have like a huge debt jubilee, I don't know, between America and China, or we reset everything in the next couple of years. But those trends are impossible to predict. And in case some of you weren't on yesterday, I'll show again what I was showing yesterday. Is this. One second. Gotta draw it. Okay. So I know this is a lot here, but let's just look at interest. This trailing 12-month interest at any point in government's history for as long as I have data, which is back to 1928, actually. This is on $1 of tax received. Okay, so this is a per dollar analysis. and the total interest payment is average 20 cents in a pretty normal time of America, which were high interest rates, by the way. But this was the beginning of the Great Moderation. It was even up as high as 30 cents on the dollar of tax. And we are above, now moving into danger territory. We are moving above the all-time average, but at least we're not up to Great Depression territory of 60 cents on every dollar of tax spent on interest. Again, I'm not saying I know the future, and I'm not trying to paint over all the problems. But just think about how many newsletters you read where people say like the world is ending tomorrow. This could go on, I think, for a long time. We just saw the bromance explode. These guys were supposed to cut off $2 trillion to the deficit. One never wanted to do that. The other at least pretended like he was going to do it. Yeah, good question, Marcus. So, it's just the nature of the price at this point in time. So I'll show you another one. I'll show you the PSR. So here we have market cap and revenue. All right, so this is minor revenue. This is obviously the market cap is huge compared to minor revenue. We can talk about this again if you guys want to look more into this. But if we just look at minor revenue, all right, so this is an academic. This is not real. This is an academic calculation of if you sold the Bitcoin that you mined and earned transaction fees on every day for 365 days, like if the whole network did that, how many dollars would that be on a rolling, trailing 12-month basis? The highest it's ever been was 16.7. But then if you look from the halving here, the next halving, it was strong. Like it was just kind of cut the knees out from the industry. Like the revenue was going really, really fast, then the halving. And it's just, that's been the effect at the prices that Bitcoin has been at. Then even dipped with our price going back to 87,000 or whatever it was. 80,000, 82,000. And now it's making a change again. This is a very slow moving trailing 365-day calculation. I fully expect this to be higher, in the future. It's just these waves were way more flexible, it seemed like. But now, due to current price action, this is just, this is what it is. I don't really have an explanation other than price is not keeping up with prior trends. Because if you look at it here, the revenue did go down here in 2020. And plus we had, pandemic and everything, but it recovered quite strongly, quite easily. 900 Bitcoins per day. Now we're at 450 Bitcoins per day. I don't know. It's just, that is what it is. That's what it's pointing out to be. Yeah. Back to here. Again, this is the most important column, last column, but this column will change every day on prices. So hopefully, presumably, over the next couple months, we're going to be pretty high, and this is all going to pull up. But it is true that we are actually at an all-time low of the power trend, even to this day. Yeah, like the end of 2024, we even had a higher power trend than now. So It depends on how quickly the bull comes to really push this higher than prior years. But I think on the conservative side, on the sleep well at night side, on the don't have Maalox moments side, you know, it's okay that this thing is not as good of projection as say 2018 or 2019. And by the way, when I say 2018, I mean all the data until 2018. It's not just 2018. It's always cumulative, right? So this is all-time cumulative, this last number, and this is 1 year less. Each row up you go. And then back to this question, again, what Marcus was asking. Yeah, I mean, I think this is a strong part of the story, which people aren't. Like, it's easily solved with higher price. It's easily solved with number go up technology. But that's what it is. It was a strong effect going from 900 Bitcoins a day to down to 450. Also, a reminder, this green line will approach the black line faster if more central banks reserve Bitcoin. So that's another thing to keep in mind. But we're still pretty low, right? As we've talked about, only about 50 billion, 500,000 Bitcoins or $50 billion in banks, in central banks, in governments right now. So it's not that much. But if they reserve more, this green line will come down because you have to remove those Bitcoin reserves. The green line is pure fiat and gold. That's it. And silver, a little bit of silver, but it's pure government money, pure historical money. No Bitcoin is in this green line. But to reiterate the point here, which I've already talked about, but just to reiterate it with Sminston's chart here, is I think this is a little bit, it's interesting. It's probably going to even turn out to be true, like self-fulfilling, that once this line goes up, i.e. more money printing relative to debt, the price will skyrocket. But I really don't think it's the driver. I think, they're just continuing on as they do, printing money. Yeah, on the margin, they come down a couple trillion. Come down a couple trillion, go up a couple trillion. It's more just dynamics of the Bitcoin network and being adopted and grandma getting excited at Thanksgiving. Yeah. Yeah. No, I mean, I agree. I could do all of these things in Satoshis. I could value them in Satoshis or Bitcoins, but I think it's still harder. Also, in terms of our brains, I think it is harder to do. Even here, where you're looking at the base thing, how do I convert it? If I converted this to Bitcoin, it actually wouldn't make sense, right? Because we'd be at something like, 20 would be 200 million Bitcoins, right? Not 20 million, where we're at right now. $20 trillion. So you just can't really put this in Bitcoin terms. Now, it makes sense to do dollars because everybody thinks, no one really cares about the stock of dollars. Even though it's true that base money, Federal Reserve dollars are only like 5.6 trillion out of this. But you have the gold, you have euros, yen, yuan. It's Wittgenstein's ruler. There's no North Star here. I could put it in gold ounces, but even that doesn't make sense because there's only 6 billion gold ounces. And if I put this into gold ounces, you would have a number that's bigger than 6 billion. So it actually only makes sense, at least to my mind, to put it in dollars, because dollars are just kind of like, you could create them out of thin air, I guess. But it's true. If you think about what this chart represents, there's actually only $5.6 trillion in this green line. And then there's 5 trillion euros and whatever, 500 trillion yen, whatever it is. I got to find it. 6 billion ounces of gold are in here. This is a big one, Jimmy. Yeah, you're right. They do end with an exponential rise. Yeah. No, I agree. Definitely agree. And we paint ourselves a lot of, or tell ourselves a lot of stories about why, these bubbles might rise longer than they do, right? I was telling myself a lot of different stories here. I was also telling myself a lot of stories here when there was a double top, and I didn't think double tops meant the second one was the top. I do agree with you about the leverage, though. Like, I need to get a handle on that with these charts more and show more leverage, open interest, whatever it is. I don't agree. I haven't checked in on Bianco in a while. He's not a Bitcoin fan, so what is he saying? Is going to be gold back to the money? I don't agree. I'm one. Sometimes I can make some calls based on these predictions, but I'm never going to make such a call because I've listened to too many newsletters, read too many newsletters, listened to too many podcasts over the years where these people always declare the end or it's changing. I mean, this guy, Robert Prechter, he was a deflationist for like 50 years, saying that eventually the dollar's going to crash. It's good to hold gold, but the dollar's going to crash. Everything will crash with it. He was a deflationist. There was that whole debate, 10 years ago between Peter Schiff and him. And I agree with Peter on this side. I mean, I'm an inflationist. There's nothing more solid than this trend to show inflation. This is right there. I'm not gonna predict that this. I'm not gonna be the one to predict that trend is going to change. They would be rock stars if they actually were correct and predicted it. That somehow it's a new system. I don't even know what Bianca's not a Bitcoiner, so is he saying gold? It's gonna be gold-based currencies and whatever. I don't see it. Oil is very simple because oil is consumed. That's the reason. Yeah, you can store it like on ships and containers and barrels for quite a long period of time. Although not forever, I guess. Even oil goes bad, but or some of the different grades of it go bad, I guess. But it's a consumption commodity, and you just can't do it. That's like why wheat. People talked about making wheat money for forever, I guess, but it's never worked because it goes bad, it spoils. Grain is a little bit better if you can store grain. That's probably how a lot of civilization started, was storing grain, and then like Sidney Homer makes this point in The History of Interest Rates. Great book. I used to have it here. I don't have it on by my side right now, but It's undoubtedly true. Undoubtedly true. This is why I'm not like a gold money crazy gold bug, is that you did not need money for civilization to start. You only needed credit. So I'm absolutely a credit theory of money person. It's like a farmer could have lent his nephew some seeds and even his plow for his neighboring farm. So when the next harvest came, both the farmer and his nephew would have a yield that was greater than before. Like there's no money required there. There's no barter. Yes, you have like a commodity or you have something tangible, but still it doesn't last long. You got to plant the seeds eventually. And storing grain became a big business throughout history. So credit is absolutely before money, unquestionably. It's just money was needed when you would go to places where you were never going to see your trading partner again. So when you were going to go around the Horn of Africa or whatever, go to Asia, yeah, you would take a bunch of things back on your boat, but might be a spread. And this is another point, is why the double entry theory of accounting is also helps with all this. Is, you know, it's the trade balance, by the way. You might have given 100 million Florentine florins worth of goods to China. China might have given you 900 million florins worth of, sorry, 90, not 900, 90 million florins worth of goods back. You take the 90, but you still wanted, you have a deficit there of 10 million. So you want to take that in gold. And so you would take the gold. It was a way to transport value beyond a particular place that everybody knows you. Because if everybody knew you, and if you were in a small community, there's no reason for money. There's no reason for money at all. You do everything on credit. Just like you do with taking the garbage out one night, your sister does the dishes the other night. Even in a large-scale economy, if everybody knows each other, you don't need money. You only need it for extended journeys, basically. So that was oil, bottom line. And I hope I answered the question about gold, but that's my view on all that stuff. Hopefully you're getting the point now with, I try to not be too dogmatic. And it's just, how many newsletters have ended with, you know, the only solution is gold. The only way out is gold. It's like, yeah, maybe a little bit, but also it'd be great to have your own company and earn dividends that way. Now, look, I agree. Bitcoin is a great solution. It's a great thing, and we see that it's growing. It's way better money than gold or fiat. But it's not like, it's not the solution to humanity. There's other things involved there. You could probably look at some of these exhibits in Bitcoin 2025 and understand that Bitcoin's not the solution to humanity. As great as it is. I feel like I'm getting a little bit too soapboxy with these lectures, but let me know if you want to look at something else. So that was the point about the interest. Yeah, it's high. $1 trillion, $1.1 trillion worth of interest right now is going to be part of the budget. As what has been received in tax receipts over the last year, that's 20 cents on the dollar spent on interest. It's a lot, but it's not the most we've ever done, proportionally. And also from the money print, which adds to the this makes more sense just looking at the deficit. Remember, this is the deficit on a trailing 12-month basis. Every time red is a positive number, it's added to the national debt. Every time it goes negative right here, it takes away the national debt. And this is rolling, trailing 12 months. So, again, what this was happening here in 1992 is the government was collecting $1. They would spend $1, and then they would have a deficit of 40 cents more. So they would spend $1.40, only earn $1 in taxes. And the printing press helped them, but it wasn't like it wasn't the main thing. The main thing was borrowing. They just borrowed from creditors. That's why this red is so much bigger than printing. But when printing really helped was here, 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 and now they're destroying money here. So it's another reason why I don't think, look, this may be the easiest thing to say, and maybe I would look stupid a year from now after like the whole world is burning from fiat currency, but let's put the average deficit, the average money print. Okay, so again, over the course of the United States, since the Federal Reserve, the government has earned $1 in tax, spent $1 in tax, and then spent 28 cents more. Okay, earned $1, spent $1.28. On average, they only get 4 cents from the Fed, from the printing press. Now that's a very volatile, crazy, stupid average, because you see, like, you can go a lifetime with, half a generation, whatever, being at the average, and then be 15 years like we have here of just madness, well over the average, printing 68 cents on the dollar one moment, 37 cents the next, and destroying money here. I'm not giving them credit. I'm not saying it's great. What I'm saying is this party is going to go on for a long time. So that's why we come back to this or this. What do you guys think is going to happen with this bromance ending? Is it a big nothing burger? Are they going to back off? Are they going to try to de-escalate mutually? Is Elon still going to get some subsidies? Also, here's another reason. Just look at this. I mean, this is probably the best example, frankly. Hyper Bitcoinization would be amazing. But if you look at how little the Bitcoin network is used compared to Fedwire, I mean, are we ready for hyper Bitcoinization? Is it coming tomorrow or in 6 months from now? The dollar is gigantic. If I could show you one chart that would show you the network effect, as the Winklevi would say, the network effect of the dollar versus the network effect of Bitcoin, it would probably be this chart. 1,100 trillion dollars velocity, 6 trillion, 7 trillion for Bitcoin. Yeah, I mean, you can't exactly be the U.S. government and push that man away or his companies. I know Ukrainians can't, as much as they don't like the rhetoric. But I think you're probably right. I mean, this is huge. You think like this is not only huge, but there's like decades of relationships and although we see relationships can be torched in 4 months in this administration. I'm thinking of like trading partners and stuff too. Who knows how that will all go? But I mean, hyper Bitcoinization can handle it. You can. Bitcoin, all the price has, the only thing to make this chart change, like I said, is the price has to rise. Bitcoin doesn't have to change anything. The price can rise and you could meet this volume. Wouldn't have to do anything else. But again, it's a question of probabilities, right? That's why I think you should take comfort. Again, not financial advice here, but I've made mistakes through the prior bulls of perhaps not enjoying the gains as much as I could have to be ready for the discounts. We'll see. Right. I agree. And I don't even think he believes in the fiscal stuff. I mean, yeah, he might a little bit, but I do not think his explosion merits his, how do I say this? I do not think his feelings on the fiscal deficit merit that explosion. So I don't know what he was so mad about. He was mad about something. Obviously, thought he'd have more influence in the government or whatever. But it's not just the fiscal situation in the United States that made him go crazy. I don't know if it's because Trump was joking about the ketamine. I mean, you can be sure that the ketamine news was leaked from the White House, like the bladder problems and stuff. I'm sure that came from the White House, not from Elon's circle. But I don't know what really was there to. If it's just ego, then it's ego. But certainly doesn't seem smart to torch your own government contracts if you're a founder and owner of like major publicly traded car company. And yeah, he doesn't believe the Bitcoin stuff either. I mean, he thinks he's better than that, or Dogecoin is better. Yeah, I hope that doesn't come. I'm certainly not a Steve Bannon type, but it's funny to see these factions, right? Like the Steve Bannon types saying that he should be deported. Elon, he calls him a techno-feudalist. And didn't Elon say something like, Trump's only going to be around 3.5 years, I'll be around for 40? Never a dull day in the Twitter sphere. I can tell you one more thing about the power curve, how the power curve has changed. Okay, and I should get this chart ready. It's enlightening, but just like we were talking about here, how depending on where you stop the data, your projection will be different. The power curve at the time when this 2017 bear got fully exhausted and then puked down to like 3,000. All right. The power curve at the time, and I actually posted the first time was right here, the very last day of 2018. The curve at the time was actually a perfect support level, and it broke through. Just maybe coincidence. I'm like I said, I'm not a trend line follower, but this black line at the time in November of 2018 was literally like $6,000 something. Now it's only 5,000, so it's gotten weaker. But at the time, it was like 6,200 at that moment. Price pierced it, and then it puked. So that was kind of interesting. That was a real like interesting. I remember specifically thinking about that, like when I was starting to draw these curves for the first time with the power curves. Like, wow, that's a really good, support. This time, I didn't really notice much. It was probably a little bit higher. Maybe it was, I don't remember, to be honest, where it was here, but obviously on the way down, if it starts approaching the power curve, you want to be pretty careful. Yeah, I remember that from the old newsletter days when I was reading like gold mining and other newsletters. Everyone was always talking about the rare earths. Is there a rare earth ETF? Let's look at Sprott. Good old Sprott. No? There we go. One second. About to pull it up. You can tell I'm not a trader as my... Here's Sprott's Critical Minerals ETF. It's up, but it's not like it hasn't been killing it. So this is a pretty new one, and it's down all time. But I remember people saying that this, and it may be a big deal. I mean, look, you saw what Ukraine could do to Russia with just a few drones. Like, that was a wake-up call for everybody. And if China continues to control all these rare earths, I think it probably is a good investment. But it is interesting to me that, again, newsletters, I got to find a chart that pulls this back further, but I don't think they really had it. It wasn't as big a deal as that we're saying for a long time. Let me see if I can find Remex. Zavanac one. I mean, this is why it's very difficult to be a newsletter writer, or I would recommend not reading most of them. Like, other than gold is going to the moon, I think that was the next most common topic from these newsletters back in the day was rare earths. How the hell? I mean, that's just devastating. 84% down all time. Whereas if you invested in Bitcoin at this time, I don't know. Maybe it's time for the rares to turn around. But is this stock going back to, its IPO? $300. Some information for you if you want to look more at it. It's not that big. 230 million. They take 0.5% from you. So yeah. Stick with me on the Bitcoin stuff, the fundamental stuff. I'm not sure I can help you with the other stuff. And probably I saw something from Willy Woo, which was probably okay all time. That's not correct. Give me 1 second. Okay. So here's another one. It's from TradingView. Into the block, calculated it, but this is another reason why I think this year has been pretty tough is I think the sales. So this is hodlers. This is, as I understand it, it's people that have held for longer than a year. They don't actually describe it. I'm pretty sure it's just people. It's coins that haven't moved for a year. All right, so 12 point. We've looked at this before, right? So it's 12.25. It goes down every bull. All right, it does, but it actually usually goes down like really down after the bull peaks. So it bottomed here in March, February, April 2018. And then this one actually was pretty right on it. It was October 2021. So we were at all time highs here, $60,000 Bitcoin. It bottomed. It was kind of interesting. This is maybe Sailor, I guess. I don't know, buy-in, but I wouldn't exactly say you can predict tops and bottoms here, but I would say they've clearly for a long time, people that have a cost basis of $1,000, a couple $100 per Bitcoin, they've been enjoying themselves as Bitcoin has been approaching and has been at $100,000, right? So, and that's just to be expected. So it's also possible that this is way stronger than anything institutional holders can do. It would be good to line this up against price. I gotta make a chart of this. All right, guys. Anything else? I hope you enjoyed the fireworks and the popcorn as much as I did. I do think it's probably going to be a nothing burger, though. Unfortunately, got to wait till the midterms to see if something really big is going to change, and hopefully, for our security over here in Europe, Ukrainians are still getting bombed. We can look here. One more thing. It has been the longest gap, right? So if we look at the end of the 90th percentile days, which here is like, say, March 2014, right? 3 months after the high. So March 2014 to the start of the next one, October 2017. That's 4.5 years. It was 14 or 13. Oh, sorry, 3.5 years. 3.5 years. 3.5 years. So from here, even if we count, the second top till today, right? It's already been 3.5 years, going on 4. So we're due. We're certainly due to get above the 90th percentile, and we're far from it. Remember, these spikes are days above the 90th percentile. So if you go back to here, like 4 full years. I think we're due for a breakout, but like I said, never financial advice. Just enjoy it. No Malox moments. Let me know if you think we should look at anything else. Thank you, Slonic. I know I got to get back to you still. And I will. All right, guys. Have a great weekend. Have fun with your Bitcoin, as Trump says. And talk to you guys next week. Take care.